The video by REITspro.com. Today we talk about the risks of REIT investing, and the importance here is what are the implicit risks of investing in REITs. So there is the first part here that we have, which are risks which are implicit, and the second part would follow later, which is about the risk, which is the caveats which you have to take care of when you invest in REITs. So just to summarize first, REIT investing is about investment in real estate investment trusts which invest in rent generating completed commercial real estate. These shares are called units and they are listed in stock exchanges. Third, the unit holders can own undivided shares of commercial real estate by way of owning REITs, and then they derive regular income by way of rental. So if you really need to know more, you can visit the website and see our earlier videos. You can also connect with us on Telegram or WhatsApp. We also have in-depth training sessions where you can gain more knowledge on REIT investing, and you can visit our website for that on the trainings page. So part one, as I have talked about, is about implicit risk based on, and this is based on nature of REIT instruments. So the nature of REIT instruments can be summarized as this. So they are basically two-in-one instruments, which are investment in commercial real estate, which is properties, and an investment in stock markets. So they can be bought and sold like regular shares on the stock exchanges, and therefore the risks are built into it because of being a two-in-one instrument. The first being the stock market risk. Now these are listed on NSE and BSE, and we know that stock markets are ever fluctuating. So the risk of stock markets can be defined as the movements which can impact the REIT prices, and there can be an overall selling pressure. When there are very sharp downturns, then REIT prices can come under pressure. However, there is one more side to it that you have to consider, that REITs have a low correlation to equity. So as you see in this graph, it's a limited impact that the markets have on REITs, and in fact the long-term prospects are like properties. They would fluctuate in the short run as far as the stock market is concerned, depending on the movements, but long terms they will replicate, eventually they should replicate what the underlying property replicates. The second is the property markets, the risks that come with the property markets. So the investment here is in commercial real estate in terms of Indian REITs, and there can be several micro factors, of course, for example legal issues, vacancies, location, etc. And there's a major factor in India that it is commercial real estate. So what about stability in the times of economic downturns? You don't have, right now in India, you don't have residential REITs. So what happens if there is an economic downturn? At that time it can get adversely affected, right? So we also need to consider in this scenario that the very purpose of REITs is professional nature and of management and diversification. So you should be able to eliminate a lot of the micro factors. The second factor, which is the economic downturns, you really need to take a call on the outlook that you have for India, and we have a global precedent where the REITs are pretty successful, and in fact there are residential REITs also. So in India we may find residential REITs coming in the coming times. The third aspect is management. So can we really trust our money to somebody else? That's a question you have to ask yourself. So when you trust your money to someone else, there is no satisfaction of managing your own money, and of course the trust issue, whether the person would do good to your money, whether the properties that are brought in the trust are commensurate to your risk profile, and would they be in complete faith. So for that, one also needs to consider that can you on your own manage the transactions and regularly maintain the properties that you own? Is that something you can do, or should you rather trust your money to somebody else? And additionally, the SEBI guidelines have stringent controls for REITs. So there are very specific guidelines on their investments, their distributions, and so on. So to a certain extent, you can really rely on what the SEBI regulations do. The fourth aspect is the legislation. So there could be changes in compliances and taxes. So this is one aspect that can impact your REITs negatively also. So the legislation can change unfavorably, and taxation can change unfavorably from what it is at the present. So but here what we have seen over a period of time is that the government of India intends to use both legislation and taxation for the purpose of enhancing these securities in the market, the REIT securities in the market. Also, globally, they are meant to be investor friendly and tax efficient vehicles. So it seems that this could be a risk which may be lesser in the future. So, and for a deep dive now, let me just tell everybody here that you can all connect to our WhatsApp or Telegram, or you can sign up for getting regular newsletters. Also, we have dedicated trainings for REITs, and you can visit our website and see the trainings page for the same. So just to summarize everything that we've done so far in this video, so the share market has fluctuating fortunes, and you could obviously be impacted by that. The second is that the property markets, there could be micro and macro risks, and we have only commercial real estate in India, so that could be a factor. But the professional management in case of REITs can help. The third is management of money. So can you really trust money to somebody else is something that you have to evaluate. And legal and taxation issues, they could also change unfavorably for REITs. So these are the four main risks that you could look at before you invest in REITs. Thank you so much. If you have any questions, you can mail us, and you can connect with us via various ways on visiting our site. Thank you so much.